Bitcoin is a relatively new asset class, and the market for Bitcoin is subject to rapid changes and uncertainty. Bitcoin is largely unregulated, and Bitcoin investments may be more susceptible to fraud and manipulation than more regulated investments. Bitcoin is subject to unique and substantial risks, including significant price volatility, lack of liquidity, and theft. Bitcoin is subject to rapid price swings, including as a result of actions and statements by influencers and the media, changes in the supply and demand of Bitcoin, and other factors. There is no assurance that Bitcoin will maintain its value over the long term. ARK strongly encourages any investor considering an investment in Bitcoin or any other digital asset to consult with a financial professional before investing. All statements made regarding Bitcoin are strictly beliefs and points of view held by ARK and/or podcast guests and are not recommendations by ARK to buy, sell, or hold Bitcoin. Historical results are not indications of future results.
Let me just start off and just say, could not be more excited. I blocked pretty much my entire day just for this podcast to have Dr. Laffer back on Bitcoin Brainstorm with Lorenzo and Cathie and myself, and a really special guest, Paolo, the founder and CEO of Tether. So we could not be more excited for this. Of course, Cathie, we always have like some of the best stuff pre-recorded. So we just jumped in and hit the record button right now. But there's been a lot happening from the Genius Act to where we are with stable coins being now potentially adopted, continue to be adopted across the globe. Let me maybe pause here. How do we best frame this with Paolo and Dr. Laffer and kick this podcast off?
Well, I think that we have just an incredible opportunity with Dr. Laffer, who is a monetary scholar. His mentor was Robert Mundell, who won the Nobel Prize for monetary theory. And Art also was in the Nixon administration. He was not advocating for this at all. And in fact, he's been trying to figure out an answer to it since then. But he was there when the U.S. closed the gold window in 1971. And when we did our first white paper on Bitcoin in 2015, we collaborated with Art Laffer. And at that moment in time, he said, after he read the paper, he said, "This is what I have been waiting for since 1971, when we closed the gold window." And I remember saying, and I've said it on this podcast before, I was saying, wow, that sounds like a big idea. How big could this be? And Art said, well, how big is the U.S. monetary base? Back then it was $4.5 trillion. Now it's about $7 trillion. So that's how we started with Art. And now we're into the second phase of this. Stablecoins and regulatory clarity and legislative clarity evolving here in the U.S. and around the world. And Art and I are talking about stablecoins. And he said, wait a minute. This is private money. We're going back to private money. This is so exciting. He was already excited about Bitcoin, which is, obviously the new global monetary system. But stablecoins being an on-ramp into DeFi, decentralized financial services, and private monies, essentially. It got him going again. And so we wanted to do this podcast, and just very grateful that Paolo has agreed to do it. I had the privilege of visiting Paolo and Giancarlo in Lugano not so long ago. And I said to them, I described Dr. Laffer's excitement about this new world, Tether and so USDT and USDC. And he wanted to learn more about it. And so I thought, okay, let's all learn more about it, because Dr. Laffer is going to be asking some very important questions, and we may not have all the answers, but Paolo, you're going to have more of them than we are. So maybe we can start with Paolo, you describing USDT and what it is. There are many people who are just learning about this new world, especially This is called Bitcoin Brainstorm. And so many of the people who have tuned in over the years are very Bitcoin centric. And here we have Tether, USDT, and USDC really evolving and helping the DeFi ecosystem, which is primarily on Ethereum. So maybe we can start there. And then I'd love to have Dr. Laffer ask you questions and probe this new monetary system.
First place, can we do the acronyms, USDT and USDC? What?
USDT is Tether and USDC is Circle. So these are the stable coins. And I just wanted to also, I know Lorenzo has been on this podcast before. Lorenzo heads up our digital asset strategy, and we'll be asking questions as well. So tee it up for you, Paolo.
Thank you, Cathie. And just let me start with thanking you for having me on your podcast. So it's a big honor. And Tether is a company that was born in 2014 for a very different purpose. The reason why USDT came about was to offer the ability to move digital dollars at the same pace, the same speed, same low friction as Bitcoin across exchanges. 2014 was a very different era for exchanges and crypto and Bitcoin in general. There were 4 or 5 global exchanges. There was Bitfinex, Kraken, Coinbase, and a couple others. And each one of them was international or foreign to the other. So, the ability of arbitrageurs to move money across exchanges was very, very hard. I mean, the arbitrageur sells Bitcoin on the exchange where the price is higher and buy it back on the exchange where the price is lower. And it's easy to move Bitcoin from the exchange where you just bought it to another exchange because it takes 10 minutes because the block time of Bitcoin is around 10 minutes. But moving dollars to a foreign country internationally, it would take 1 day, 7 days, there are weekends and all that.
And cost a lot.
Exactly. And if you are an arbitrageur, 1 day is an eternity if because of the price swings. Like an opportunity that was there 1 hour ago might not be there anymore. So the simple idea, was quote unquote simple idea of USDT. So the first stablecoin was, well, why don't we reuse the same brilliant technology that Bitcoin created, but we just put $1 on it, like very, very simple. And USDT came about, and you rightfully so said that the stablecoin market is running on Ethereum, but actually the first version of USDT was running on OmniLayer, that was a Bitcoin layer. So actually we launched USDT, the first stablecoin was launched on Bitcoin because Ethereum was not there. So Ethereum was basically the ICO of Ethereum was probably early 2015. So actually we worked with this team to build this was called Mastercoin 10 for the history nerds, and so that's how it came about. So long story short, for the first few years until 2016, no one really cared about USDT. Then in 2017, Binance was born and other exchanges were born, and they didn't have bank accounts. So they started using USDT as their dollar. So all the trading pairs of all the crypto tokens were traded against USDT. 2018, there was a market crash in crypto, and USDT at that time was the first time it reached $1 billion. So it was our first $1 billion in market cap. Fast forward to 2020. At the beginning of 2020, USDT had around $4 to $6 billion in market cap. At the end of 2020, it was more than 40 billion. The reason that growth, and sometimes you create a company and then years later, you figure out why everything happened. So the reason why there was that immense growth from March 2020 to end of 2020, and that continued on, right? Today, we are $163 billion in market cap. The reason why all had that happen is because in 2020, at the beginning of 2020, something that we all remember happened. That was the pandemic. So basically, what we understood is kind of like very humbling and crazy is that there was a shift of usage of USDT from the pure crypto trading to the actual real world utility. So from 2017 to 2020 was the time during these 3 years in the emerging markets, developing countries, the young generation was looking at crypto as a way to, get some money, speculate. All the young people are the more prone to learn new technologies, right? So the emerging markets have more natality, so more youth, so more young kids. 2020, the pandemic hit. And as always, the emerging markets are endangered more. And so everyone, like even in US or Europe, there were jobs that were lost and all that, right? Fine. But in emerging markets, that was even more aggressive. If you think about Argentina and Brazil and Turkey, all these, the national currencies of these countries started to fall much faster against the US dollar. So like the Argentinian peso lost 90+% of its value against the US dollar in the last 10 years. The Turkish lira lost 80% of its value against the US dollar. And so, but that accelerated with the pandemic, because if you don't produce anymore, that is even worse. So the crazy thing is that before 2020, all the parents of the families were used to go around and buy cash dollars in the black market in the streets. With the advent of the pandemic, these people was much harder to go out, was even more dangerous to go out because everyone was freaking out for the virus. And so the kids told to their parents, don't go out. There is no need to go out and buy cash dollars because I have the cash dollars here on my smartphone. I learned that through crypto. And so now you can have dollars on the smartphone. And like, that is, if you see the chart of growth of USDT in March 2020, there's a huge curve going up. And we learned that, we learned this story and why the whole happened last year. So we tried to go back and understand. Tether did not have a marketing team until 2022. But in 2022, we were already like $8 billion in market cap. So we tried our best to understand and to have people going all around in these countries, in all the poorest country, to understand how USDT has been used and why and how it all happened. Sometimes you have to look at it in retrospect.
So, Art, that's the start of what's becoming a very big story. And I know, as I mentioned, when I started speaking with you about stablecoins, you likened this to another point in history. So maybe you can give us a history lesson, Dr. Laffer.
Yeah, and then I'm going to come back and ask you some questions about stablecoin, if I may, and the backings and how you choose the assets and do you guarantee the values and all that. What Cathie is referring to, I think, is looking at the history of the U.S. monetary system from, let's say, 1790 until 1913. We had a private money system in the U.S. Now, the government did three things. It defined what a dollar was. A dollar was 1/20th of an ounce of gold. It was 1 ounce of silver. That was the definition of a dollar. Not only that, but the government also did minting of coins, but so did a lot of other people. You bring in bullion or silver, and they would mint coins for you at the correct purity and all of that. But so did a lot of other mints. There were mints all over the country that did it at a price, a 3% commission or so. The third one, which was really important back then, before the Fed got into it, was they audited the balance sheets of the individual banks. For example, currency in the U.S. then were banknotes issued by individual banks, and then they were displayed their balance sheet, their income statement, et cetera, so that people knew what their leverage was and all of that. And so these banknotes sometimes sold at a slight discount or a slight premium to each other, like pounds did not 30 years ago, not 40 years ago. So therefore, but that was the whole thing, and it was a private banking system over the period 1790 to 1913. What is that, 120 some years? While there were bobbles, ups and downs, and prices rose and they fell and they did all of that stuff, the price level was stable. There was zero inflation for 123 years. Then the Fed came in 1913 and started to take over the monopoly of taking over the private monies. did that. It then devalued the dollar in 1933 from $20.67 an ounce to $35 an ounce. They did that. And you can see the whole process. Then we had the interest equalization tax, the voluntary foreign credit restraint program. We had the Smithsonian Accord, which was the final one, where after the Smithsonian Accord, we broke all links in every single way with gold or anything backing the dollar. It was an unhinged paper currency. You can see the whole process it has. This is where we are today. If you look at what has happened with inflation over that period, I think the number is, and that prices rose 32-fold. During the period 1913 to the present. You have an unhinged paper currency. And it had been my contention with Cathie in our podcast in 2015 in our paper that the existence of Bitcoin and the very sharp rise in the price of gold was the private market's decision that they didn't want to own government monies any longer. They were trying to substitute out of those monies. And at that time, Paolo, I said that there's one thing really missing in the monetary system. When gold came in, gold was an asset, and a lot of people made a lot of money investing in gold and all that. But to make it a money, what you have to do is have something that stabilizes its value so that we can do contracts in gold that we know the value of gold 5 years from now, 10 years from now, 20 years from now. And so we can develop a capital market where we know the value of the units of account that will be there, so that capital market is stable. And the one thing Bitcoin missed was anything that stabilized the value of the currency, quote unquote. And I defined how the Bank of England did it 3 times a day, every morning, every noon, and every night. At the close, they looked at whether the banking system in Britain was buying gold or buying pounds with gold. Which way were they going? And then they ran their monetary operations in regard to this. For example, if people were cashing in the gold for pounds, it meant that there were not enough pounds outstanding. And so they introduced a monetary policy, an open market operation, increasing the number of pounds outstanding to stabilize the value. If in fact people were cashing in their pounds for gold, it means that pounds were too plentiful. So they would then sell gold in the market and take pounds out and stabilize it. And they did this for a long, long time. That was needed to be able to take a Bitcoin or a gold market again into a private sector use as a monetary system to replace government monies. And all of a sudden I discovered that Cathie told me about it. What's this thing called stablecoin? It is the exact second transaction, I believe, that I said was missing in 2015 when we did our paper that needed to be put into existence. And then I find out what you've been doing there with USDT and USDC, that, and you seem to fit into the missing link, if you will, for creating a private money. And I'd love to know how you run your operation on stablecoin. What do you buy? How do you do it? Where did you get your funding initially for? And do you intercede in there so you stabilize it like the Bank of England did? You know where I'm coming from, Paolo.
Yeah.
And you know the
Absolutely.
questions I'm asking. I'd love to know technically.
So let's start a little bit with the mechanics. So USDT, again, is a digital dollar. So a company would, an issuer of, or a company that would request an issuance of USDT from us would register to the primary market. That is basically our platform. You can find it at tether.to. You register. There is a KYC ML process. Of course, we want to make sure that who we are talking to and the legitimacy of that company or person. Then once that process is established, then there is a company is entitled to request the issuance of USDT. So it means that they have to wire, for example, $100,000 through a wire to one of our bank accounts. We get the wire and we ask to the counterparty to give us a blockchain address where to send the USDT tokens, so these digital dollar tokens. So we send 100,000 USDT to that address. This company will use these USDT, will share them, will use them for trading, whatever. At some point, they will come back to us with the USDT. They will say, okay, I want a redemption. Now they send this USDT to an address that we show on the platform, on this primary market platform. They send the USDT, we receive USDT, and then we send back a wire. All right.
Then you send back the dollars to them if they ask for a redemption.
Yes, that's exactly correct.
Okay, thank you. So you intervene in that market dollar for dollar.
Yes, exactly.
In the interim period there, what do you do with the $100,000? Let's say that's 6 months. What do you do with the $100,000?
We invest the reserves in different assets. So historically, we have done in different assets. I mean, I'm known as a person that does not like to hide behind a finger. Also, we had our share of controversy on the assets that we used as part of the reserves. So in up to end of 2021, we had reserves invested in majority of the reserves were invested in commercial papers that were A1 and A2 rated, so very, very highly rated. We never took any risks. We never had any default and whatsoever. But in 2022, we promised to our community that we would start moving the reserves into US treasuries for the vast majority, which we started doing. So today we have more than $130 billion in US treasuries short term. I would say less than 90 days. The maturity, I think 81 days is the average maturity.
But really liquid short term, right? Bang, there.
Well, that's 75%. And then?
So we have, as of rest, we have gold. Well, actually, we have now, with the new increased numbers, will be more than 130 billion. So I don't have the exact number. I think tomorrow we'll have the new attestation, so I will be able to give you the precise numbers. But it's basically a bit more than 80% should be, cash and cash equivalent in U.S. treasuries. Then we have Bitcoin and we have gold as part of the reserves. Tether owns more than 90 tons of gold and more than 100,000 Bitcoin. The total reserves back in USDT are $6 billion more than the entire outstanding USDT tokens out there. So basically, we are 104% over collateralized. The entire company has $20 billion more, actually $25 billion more in other liquid assets, more than the total outstanding tokens. So the process has been ongoing. So we have always worked to increase the number of US treasuries that we have. So all the new issuances are basically going to US treasuries. At the beginning of the year, we were probably lower than 100 billion in US treasuries, and we kept upping up. So our commitment is keep going and buy more and more treasuries. I think looking at the latest statistics, we would be the 16th largest holder of US treasuries. Well, I mean, we compare ourselves to nations. We have more US treasuries than Germany, UAE, Spain, and Australia, many other countries. I think South Korea is looking at us in their rear mirror. We are very, very close. Then last year, we were the 5th largest purchaser of US treasuries in 2024. Like you have China and Japan that are dumping the US treasuries. So our process, we keep adding up US treasuries, always short term. Historically, we had a bit of Bitcoin and gold. Given the markets where we operate in, there was a lot of interest for us having some portion of gold in the reserves. You can imagine that emerging markets, developing countries. Let's do a step back. USDT in this moment has 450 million users, growing by 30 million new users per quarter in the emerging markets in developing countries. That are the exact countries where gold is king, where every single person does not trust their currency, local currency. And so the fact that we have a little bit of gold historically was very appealing because they don't trust governments. They are being used to be distrustful of their government. Think about Argentina and how many times.
Can I ask you a question as you go along?
Sure.
Why didn't you make 2 separate stable coins, one for gold and one for US dollars? Why did you pool them all together?
So actually, we have a stable coin on gold called Tether Gold. It's called XAUT. And it's now $800 million worth of gold. So now basically there is some reasoning. We had some reasoning for having some gold as part of the reserves because, U.S. Treasuries, they're even in short term. So, but long term, we think that we're going to be 100% the U.S. Treasury.
Let me ask you one more question if I can, Paolo, and forgive me for monopolizing on this, Cathie.
No,
But
that's great.
Are your financials published? Are they made public? Are you under any exchange, under any regulatory authority where people can look you up, check you up, have a household seal of approval, that sort of thing? You look like a great guy and honest and trustworthy, but
But I'm Italian, so you never know.
I got it. No, I did.
No, I'm joking, but yeah, we publish a quarterly
Lugano is
attestation.
Switzerland, isn't it?
Yes, Lugano is Swiss.
So you're really Swiss.
No,
that sounds a lot better than Italian. I mean, just for the record.
Actually, I'm Italian, but living in Switzerland because in Italy nothing works. So I have to stay in a place where things work.
I'm just teasing you. I hope you know.
I know. But Lugano has the great Italian food and things work because they have Swiss efficiency.
You have Shania Twain. Shania Twain lives in Lugano. So if you have Shania Twain, I'm all for Lugano.
Do you know Shania Twain, Paolo?
No.
Country singer.
Oh, probably at one time the most beautiful woman in the world.
Okay. There you go.
I didn't know that.
Look it up. I know you kids don't do that anymore, but look it up.
But going back to your point, we release a quarterly attestation that is an independent attestation made by BDO. BDO is a top 5 auditing firm. Is a independent confirmation on the reserves. So they basically get directly in touch with our institutions where we keep reserves. By the way, just to say, our treasuries, for example, are kept in Cantor Fitzgerald. Howard Lutnick in 2024, at the beginning of 2024, very publicly went out, I think, on Bloomberg TV saying, I see the reserves, they have the reserves, I spend a lot of time in doing the diligence of their reserves, they have them. But nevertheless, we are working on this quarterly, we have this quarterly attestation. It's published online on our Tether.to website, on the transparency page. We have been working, and thank God, with the new administration in the United States. With the previous administration, we had Senator Warren sending some very aggressive letters to the auditors and other companies, that also resulted in the Operation Choke Point 2.0. That also resulted to have a hard time to get, the top 4 auditors being involved in anything crypto. Things are changing. I think will be changing over time. The new administration is very much in support of crypto in general, and of course stablecoins. Now the Genius Act passed, also that was a great move because will simplify our life to get an audit done. So that is work in progress. But yeah, I mean, transparency is very important for us.
Now, how are you regulated? And excuse me for asking all these questions. Are you regulated like a bank or like an investment firm, or what? How does the regulation hit you, especially here in the U.S.?
That's a great point. I mean, here in the U.S., we are 7 days in the regulation, I guess. Well, actually, the law has passed, but now OCC Treasury has to provide the specifics of the processes, right? So if you read the Genius Act. So Tether is incorporated in El Salvador and is regulated under the El Salvador regulatory regime for stablecoins. And there are no jurisdictions, or almost no jurisdictions, that have a stablecoin regulatory regime. So there are a couple of jurisdictions that have sandboxes. Well, now until the Genius Act, right? Think about Tether is a 11 years old company. So before the Genius Act, there was no meaningful stablecoin regime. There were some sandboxes. And after the Genius Act, every single other country will start copying the Genius Act and will take probably 2 years, and everyone will adhere pretty much to the same regulations. But before that, El Salvador has, is considered a Bitcoin country. Here we are on the Bitcoin podcast. And so it's very important.
Well, Cathie and I were just down there not long ago with Bukele, in El Salvador. So we went together there. I've got some great pictures of the two of us with Bukele, so it was loads of fun.
He's talking to Bukele gives me, sorry for the parenthesis, but talking to Bukele gives me back hope in politicians.
He's amazing. You're completely correct. Malay is pretty good too, by the way. I just spent a week with Malay, and he's pretty phenomenal.
I never had the luck to meet him, but I hope to meet him very soon. Look, I mean, the El Salvador took a strong stance on supporting Bitcoin and also understanding the importance of digital assets. And so they come up with this regulatory regime that actually is very thorough, right? They has very strong requirements for reserves and all, and AML and all that is very important also for the Genius Act. I mean, Tether works with more than 250 law enforcement agencies across more than 50 different countries. Like we onboarded.
I'm on the board of AML RightSource as well, which is a anti-money laundering company that if you'd ever like to come and talk to the company, we'd love to have you chat with us. We do a lot of the anti-money laundering stuff for a lot of the big banks, TD Bank and all these others. It's a very successful company, just for the record. I know some of the other companies do that as well. Protivity does it as well, has their own, and some of the others do as well.
We are very proud of it. I mean, definitely would be very interesting because, it's everything's very new. The beauty of blockchain technology is that makes everything very, very transparent, right? So we built at Tether a collaboration with Chainalysis, with Ethereum Labs, and many others. And so over the last 10 years, we built these internal tools that are very efficient and very precise to track transactions.
Now, I'm going to keep drilling questions at you. If you forgive me,
of course.
Do you guarantee the value of your stable currency?
We never failed the redemption. Every dollar has always been redeemed at $1.
And at $1, now why do you do it at $1?
$1 minus redemption fees that are 10 basis points. By the way.
Okay. So I didn't mean that. I meant, if you're going to be doing a coin to replace dollars, you don't want to be a dollar because people are trying to get out of dollars because of the inflation, the bad currencying. And what you really want to do is stabilize the value of the stable currency, the value, not in terms of dollars. So what I would think would be a very good mechanism for you to do is you do the sort of allow the value of the USDT to rise with the rate of inflation so that you have a stable value in terms of goods and services over a long period of time. So you effectively just allowing it to appreciate over the years there, assuming inflation will be continuing these currencies, and it will.
So we are completely in agreement with that. So I think that inflation will never go away. I mean, not in anytime soon, at least. So there are a couple of ways to address what you said, right? So one is effectively a tokenized money market fund, right? So because basically, but that is kind of tricky because then it will become a security, and securities have different rules for circulation and usage, right? So it's harder to tokenize a money market fund and then have it used by 400 million people in Africa, right? So it's under the SEC would take a very strong stance against that.
They would. Okay, because that's where you get into the developed countries. You're right about the African ones, and people who don't have facilities for money are trying to do gold. This is far better than gold, obviously. It makes all the sense in the world. But if it's going to be adopted as a global money, it's got to be used in the U.S. It's got to be used in major transactions on a global scale, which means that people have to prefer USDT or whatever you call it, have to prefer it over dollars, which means that they can be guaranteed that the value in terms of goods and services will be stable over a long period of time. And that you can do by just offsetting inflation. I mean, by paying a premium or allowing it to appreciate or whatever.
So, yeah, there are two techniques, right? One, you could share basically the yield back to the holders. And there are some stablecoins that are doing that. But again, they are at risk of having problems in incurring issues with the SEC, for example, because technically you are a financial instrument. Second, the other option you could do is to start from $1, but you keep inside basically the value that you accrue, and basically you appreciate the token will not be $1 anymore, and then will keep appreciating against the dollar. And I know someone that started try to do that. The problem is the poor user experience, because unfortunately people are thinking dollars terms, and so you need to continually doing math in your head to price a coffee in a slightly increments. Every single day you have something that will be worth $1.01 and
I
02.
understand that fully. You got to have them priced shortly into USDT. That has to occur.
Unit of account.
You'll have to do it. And that would be where the inflation adjusted there would come into play.
Yeah. Could you imagine that world, Paolo?
I think that there is a better way to do it. I mean, thinking aloud, the way, and actually, that's something that we really like at Tether. So, and we talked about 1971, just at the beginning. And so we created this product called Alloy. Alloy basically is, I said that we have this gold-backed stablecoin called Tether Gold. So imagine that you can be long gold and technically short dollars. So you can buy Tether Gold, put it into, let's say, into custody, and borrow dollars out of it. So for the more crypto folks here, is like a DAI. DAI, you can have Bitcoin and Ethereum as collateral, and you get a dollar out of it. We can do the same thing with gold, right? So you put Tether Gold in a smart contract, so you own that gold, you are locking it to borrow against it, with a TVL of like 80%, and so you have a value that you can use in the day-to-day life that is priced at the dollar, but you remain long gold. That is, you mentioned like 1913 when the Fed was created. I was reading that, and surely you can correct me there if I'm saying something stupid, but the value between a barrel of oil and an ounce of gold was like 27-1 or something like that. That's pretty much, give or take, it's still the value that we have today.
You're right.
And but the actually the dollar lost 99% of its value since 1913. So that's why we thought about something that would be long gold and borrow dollars, like digital dollars, against as your long position of gold, and the risk of liquidation there, because you have your collateral. Of course, if the collateral goes down,
but this is exactly what I was focusing you on. Was what you really want to do is replace the dollar and have something that's stable the whole period through. That's what you'd like. Two markets I've heard you describe. One is the African market, where people do not have currency. They can't transact with gold with each other. They can with the stable coin. They can do that. That serves a huge purpose. And there, just having the stable coin as a dollar does plenty. It makes it liquid, transactable commodity. Bang, that's great. The other one is moving to a market of developed countries where we have dollars. It's to stabilize us against a runaway inflation that you will offset by the issuances of the stablecoin and allow it to appreciate with that. And sooner or later, just substitute itself for the U.S. dollar, which, if you look at some of these currencies, I mean, they'll go long before the dollar, but the dollar is at risk because it's a crappy asset, to be honest with you. Well, it is. You can't make a contract 10 years out and have any expectation of what the value of the dollar is going to be.
Right. And just to clarify, your 450 million users primarily are in emerging markets?
Yeah. So like Turkey, Argentina, Brazil, Africa, Nigeria, all the African countries, Southeast Asia. Think about every single person. I mean, I agree that the dollar is not perfect. It's like incomparable to Bitcoin and gold. But for all these people, like if you are a father of a family in Turkey, you work from January to December. At the end of the year, you are poorer compared to the beginning of the year. I was talking to different people in Turkey, even in the government, and they were very happy because their inflation last year was 50%, basically year over year. And they were happy because the previous year was 70%. So think about it. And so that's why the digital dollar would make enormous difference still for these people. And sure, there could be something better. Bitcoin is better. Gold is better. But even just having a US dollar is an investment for them.
fully understand.
So, Art, Dr. Laffer, I'm sorry, I'm toggling between those two. Anyway, uh, I so Paolo, you're now with the Genius Act. You have stated that you will enter into the U.S. In other words, so maybe we can talk. So this is the second part of your question, Art, right? Okay, we're moving into the developed world, and then so we'll talk. Maybe we'll talk about that, and then beyond that.
Well, let me suggest also to Paolo that Bill Haggerty is one of my closest friends. He lives right here. He was, so I know if you would ever like to have an audience with his staff or him, just give me a yell. I'd love to set it up.
I appreciate that. Look, so USDT is the perfect product for all the emerging markets because, again, we built the adoption from the ground up, right? So with boots on the ground and all that. I've been very public and vocal about the fact that Europe and the United States don't need a dollar stablecoin as the dollar stablecoins that we created until today, right? Because I'm pretty sure that, well, maybe there are few percentages of underbanked people in the United States, but actually everyone has a credit card, a debit card, bank account, Zelle, Cash App, you name it, right? So the difference is that a stablecoin as we know it today, if you bring it to Africa, like for example Nigeria has 10% efficiency of their financial rails. If you put a stable coin on top of it, you get to 50% because that is the amount of difference that it will make. The US has 90% of perfection of financial rails. So if you bring a stable coin, it gets to 95%. Like, sure, it's cool, it's great, but it's additional efficiency on a highly efficient market already. So you need to create something different. You need to bring a new utility to the users in developed countries. So that is what we are going to try to do in the United States. So create this revolution that we were able to make outside the United States for all the underdeveloped countries or the emerging markets and all that. But think about a very highly sophisticated user base. And they're like full of financial institutions and all that, right? So we are going to create a package, not just one product. Sure, a domestic stablecoin that works like that is a vanilla stablecoin. We are really thinking about it, and we have strong plans. But I don't want to spoiler everything because otherwise we'll be, I will shoot on my own feet. But we are going to plan. We have very interesting plans for United States that would answer your point and will go along with what you said.
That sounds very exciting there. If you don't, you're going to get other people coming in that will be very competitive. If I look at the company's balance sheet and income statement, what I'm seeing happening is they're issuing a USDT, which pays no interest, and holding treasury bonds, which does pay interest. That gives you a very large profit margin, which it means that you're going to attract all sorts of other competitors to come into your thing unless you can arbitrage them out ahead of time. And, by setting your policies, you can guarantee that you can keep your competitive edge in there if you do the proper US one.
Definitely, the Genius Act opened the door to basically every single bank and every single institution launching a stablecoin, which, by the way, I'm very proud of it because, we couple Italians making like history in getting like the most powerful government in the world, signing a law. It's very humbling and interesting. But yeah, last year in 2024, we made around 13.7 billion in profit, and this year we are going to probably beat that. So yeah, I can see why everyone and their sisters are very interested in coming in and trying to get a piece of that. So will be very interesting, but we have some very interesting ideas as well.
So this brings us to a question. This was the debate we were having the last time we talked, Dr. Laffer. Debate, or it wasn't even that. It was just trying to get our arms around a more competitive dynamic would cause. And it also is bringing us to the question, our banking system here is a fractional reserve system, right? And as as dollars leave the banking system and move into stablecoins, they move out of the banking system? And does this impact the velocity of money in the U.S.? What is the economic impact of a migration towards stable coins? And the second part of the question is, will the competition that you just described move move the stablecoin world towards something more like a fractional reserve system?
Well, I want to start from the second one. I think that stable coins should not end up in fractional reserve. I think that I would not call them stable coins. I mean, the first part of the word is stable, and I think that the interest there is in making sure that they will remain stable, whatever will happen. And I think our industry, the cryptocurrency industry, tried already with algorithms that would try to guarantee the stability of the stable coin. That did not end up well in 2022 with Terra Luna. I think that people should ask themselves, why using a stable coin? What is a stable coin? Because people sometimes tell me, oh, but USDT, you can freeze USDT or you can do certain things with USDT. Sure, yes, I can do it because it's just a digital dollar. It has to respect the same AML, KYC requirements on our primary market that banks do. So if you want something that is unstoppable, that is Bitcoin. So if you want an asset that does not have any masters, that is Bitcoin. If you want a stable coins, means you want dollars because you really like the dollar and you want to have a certain sort of guarantee that in any point in time you will get out of the stable coin and exactly the same amount of dollars. So it's always about and only about the use case and utility of stable coins. Stable coins are not like a swift knife that.
What I think Cathie's question is, if I may, is here you've got stablecoin, and if it were stable in value with regard to goods and services, not the U.S. dollar, there's no reason why an institution can't have a reserves in stablecoin and then issue liabilities, et cetera, and make loans, but all of that, just like they did with the dollar historically. The bank notes there, they could be doing that. That would be a very thing. Now, the problem with that right now is that the stable coin itself will depreciate in value as long as it's made convertible into the dollar. So it doesn't have the advantage of being stable in terms of the value of goods and services. It's only stable with regard to the US dollar, which may be very unstable with regard to goods and services going forward. Who knows? Biden could be elected next month and it goes off. And, all of you of Italian descent can understand what happened with the lira during the period of the 60s and 70s. Wow. You had to use log tables to understand what the value of a currency was, So, but there, that's what I'm thinking of is that stable coin. And when you say 450 million users, you're talking about people. What I'd like to do is talk about assets and what percentage of those assets are in little Ibu tribe town halls, and how many Yoruba or whatever else people are doing it in Nigeria, or versus how many big banks, big transactions are being done in the financial markets of London, Paris, and New York, which I think you're going to find the distribution very different than the number of people when you look at the total value of assets.
So actually, if I may, the number right now, there is a peak of individuals using USDT in the emerging markets as a savings account. And also a lot of the value of USDT is in these accounts. But we are starting to see a shift. The shift is due mostly to commodity traders. So commodity traders are realizing that stable coins are the best way to close commodity trading deals. So if you have a ship somewhere like Middle East waiting for, to load some oil barrels and waiting for a wire to clear, that is, the efficiency of the capital of these commodity trading firms can go up a lot with stablecoins. And so that's what we are seeing today already. Tether announced already in 2024, last year, in October, November, we started facilitating some of these deals. And now the demand from commodity traders for USDT is enormous. You know why it's enormous? Because if you had any other stablecoin, you would take this stable coin and send it to somewhere in Africa to purchase some assets. The problem is that if you don't find any adoption from the ground up for that stable coin in that country in Africa, then your stable coin will come back and will be redeemed. But if there is usage of that stable coin in Africa, and you can pay salaries in Africa with that stable coin, and you can buy houses, you can buy equipment and all that, the stickiness is much bigger. So that's why all the commodity traders prefer to use USDT, because on the other side, on the seller side, that usually is emerging markets, we are basically the king.
Got it clear. I mean, what you're doing is eliminating all sorts of inefficiencies in the transactions process. Not only inefficiencies in transactions, which are expensive, but inefficiencies that take time, which are highly risky. If you've got to wait 7 days for an account to clear, you're taking a very high risk. And I think that's some of the real advantages. I'm just saying that if you're going to go the next step is you really need to make it as a competitor for the dollar, the pound, the ruble, the yuan, all of those, and make it guaranteed in value. And then you're off to the races.
It sounds, Paolo, like you've got some very interesting ideas along that line, if I'm reading between the lines correctly.
Yes, we are exploring a few things that we think are much more interesting for more developed and more like efficient markets, right? So because again, even if Tether does, and this goes slightly back to the name of the podcast, USDT is now predominantly on EVM blockchains, but Tether is the company that I believe does the most blockchain education in all emerging markets, developing countries, but especially we do Bitcoin education. So we explain Bitcoin to everyone.
Yes.
And we go there, we explain Bitcoin, and they tell us, okay, that's great. Can you give me USDT? So that is because our needs as living in richer countries are different from their more short-term needs. So they have a very bad currency in their hands. And so the first thing is they think about their family and they want to protect their family and they want to get a dollar that is something that they know a lot and they know since a long time. Then with more education, with more time, they will learn about Bitcoin, because not everyone has the time that we have to learn about all the intricacies and kind of complexities of Bitcoin. So that is what we are seeing. So dollar is king there. And of course, if you live in a country that gives you a checking account and a savings account, and you have easy access to the stocks market and all that, of course, you are going to look at every single product that you hold with a magnifying lens to make sure that it's the perfect product that will give you the best yield and the best return in any amount of time. So that's what we have in our head and what we are planning for the US.
It's the both of them, Cathie, the gold system beforehand, which was an asset that appreciated. That's Bitcoin. And then there's a transactions medium, which is taking the Bitcoin as part of the financial base and making it liquid and making it stable in value. Those are the two functions that really have to be done. I mean, once you get the stable in terms of currency there, the appreciation of the asset may not be all that important anymore, but the use will be huge. And the spread is where you make your money. It's the spread between what the yield is on the liability, which is your USDT or whatever it is, and the usage will just go explosive. I'm very excited about this.
I love it because, again, Art is coming at this from his monetary expertise. And, certainly Bitcoin in the early days when Dr. Laffer blessed, sort of the concept, it was a huge confidence booster for us. So
what was it selling for back then when we did that, Cathie, in $250?
$250.
$250.
Yes.
That was a good time.
It hasn't gone up much, has it now? Joking.
So it
No.
was a big idea. And I think, stablecoins are big ideas as they evolve in the way you suggest. But in terms of that, and Art, I just want to get back to a question that you asked before about competition, forcing you into a fractional reserve system, just competition, but other companies being willing to do it.
What this stable coin is it is the monetary system. And then you can have all sorts of financial institutions growing out of it, using it as collateral. That is exactly, but what you want to make sure you're very careful with, Paolo, and just please forgive me on this, is if you knew the dollar were as good as gold, the value of gold would fall very sharply. Okay, because the dollar is far more flexible, far more divisible, far better transactions medium than is gold, carrying a little sack of dust on your back and all that. The same thing is true here, is if you have Bitcoin and you have the stable currency. If, in fact, you could make Bitcoin as valuable, if not more valuable than Bitcoin, that might well have an impact on the value of Bitcoin in the market as well.
You mean if you made USDT?
Yes, USDT may. I'm excuse me for not being hip on this stuff, but USDT as good as stable thing, and then you would find Bitcoin values coming down relative to stable coins. Just the same way that when Reagan came in and made the dollar stable, had the appreciation in the US dollar versus all the others there, the price of gold went down by, a factor of 80%, 70% during that period, way down. And then when the creeps came in again, it went right back up again. Now, with creepy weepies all over the place, it's at 3,400, something like that. And Bitcoin is at 120,000?
Yeah, it's closing in.
I mean, that's from $220 or $230 when we had our discussion. You're going to find some of these things. It's just very exciting what you're doing. Congratulations. You've done the second stage of creating a monetary system that is, at least in my quick look at it, is just an amazing transition that was needed. That was the one thing I talked about, Cathie, in our 2015 podcast.
Yes.
Was you need an entity in there like stablecoin. That's what you needed.
But we didn't know about it back then. And when people ask me,
I'm 85 years old, for God's sakes. I can't.
What I'm saying is, when people ask me today, what is the biggest surprise in this in crypto world for us in the last 10 years? It is stablecoins.
Yes.
We didn't back then. We were not talking. I know you existed, or Tether existed, Paolo, but we weren't talking about it back then, and I didn't know about it back then. Right. So
it was a different time. And look, honestly, if in 2014-15 you would have asked me what will be the size, the market cap of USDT in 10 years, thinking very boldly, I would have said $1 billion.
Mm-hmm.
Because the way it was designed was actually to help the efficiency of arbitraging across exchanges. So with 1 billion, you can moves every 10 minutes. The speed of blockchain, you can do a lot of things. But I couldn't have ever predicted, right? So it was until 2022, interest rates were basically zero. And so it was very hard to predict this explosion. And so it's not that we figured out everything from the beginning.
Well, but that puts a huge responsibility on your shoulders as well. Let me just say this, Paolo, by the huge expansion of your company and by the huge acceptance of it, you now have a very serious responsibility to the world health and productivity by making damn sure that you run it really carefully and properly to make sure it serves the functions of keeping the world economy growing and prosperous. I mean, it's like controlling taxes or anything else. You could screw things up. You need to take this. You obviously do take it very, very seriously. And all I'm suggesting is that to take that very seriously and to stay extremely profitable you need to make it the transactions medium that stabilizes the value. Bingo. That's where you need to go. It's nice to have people in Africa using it for transactions in their tribal operations. That's really important. It saves a lot. As you mentioned, the cost savings are huge for the Turkish person with his income. But it's really, you're going to come into the global scene here, being the global monetary system, X any central bank. You worry about having regulations today in the U.S., but with Bukele over there in El Salvador and some of these other places, if you can get well established, you can circumvent a lot of central banks and a lot of government regulations. You can do your own system and not have them make you vulnerable.
I feel like Rod is about to call it a day. And but Rod, before you do, Lorenzo, did you have? I realize we were geeking out economically.
Sorry about that.
Yeah, no, this is what we wanted. These are the kinds of questions
100%.
we're grappling with. Yeah.
The cost of creating a stable coin is zero. The cost of creating an ounce of gold is $3,400. So you save all those costs. The cost of creating a Bitcoin, it's 31 million coins or something like that. Is it what that Japanese guy did? Yeah, whatever it is, that's what you've got. That's a fixed quantity. But this is a very different one. The problem with Bitcoin is there's a fixed quantity, which means you cannot control the price.
Well, that's the whole idea. Store of value.
You can stabilize the price and have a perfectly elastic quantity. You've got a price primal and a quantity dual. Bitcoin's problem is that it's a fixed quantity and the price varies.
But Art, that is the feature. That's a feature.
I agree, because we tried everything else, right? So the problem is, the beauty of Bitcoin to me is that it's there, it's fixed, and you know what you get. Right, is the only form of currency that is governed by money,
and it's costless to produce.
Costs a lot of money because you need to, in order to produce it, you have to invest a lot of money and purchase energy and purchase equipment to mine Bitcoin.
But we go back to the Elon Musk issue.
Oh, yeah.
I don't want to hear this crappy
we'll
little
save that, Dr. Laffer.
No, I don't think Bitcoin needed the electricity issue. They didn't need to mine. They really didn't. What really is important with Bitcoin is that it's limited. 31 million.
Paolo, before we jump into that rabbit hole.
I'm not going to go that rabbit hole, but Elon Musk said it correctly, Cathie, on our call on that one. Remember that one?
Yep, I do.
He said, if you guys keep on with this technical crap, I'll hang up on you. and Musk was
Cathie,
right, by the way.
Yes.
If I don't mind jumping in just to say, this is to your point, this is exactly Paolo and Dr. Laffer and Lorenzo. This is a perfect Bitcoin brainstorm. I would love to propose to do this a year from now, if not sooner, because I feel like there's just the Genius Act. You've provided Paolo an amazing entrepreneur, amazing innovator, the clarity to actually go and build now even more so, and especially in the US market. So I'm excited to see what's in store for you and Tether. And then one point that you just had mentioned, I just want to give you massive kudos, as well as Cathie and the ARC team, is around education. It just takes a lot. We were only 16 years in this experiment, which is Bitcoin. And for you guys to go and provide something super valuable to the underbanked and as well as unbanked, which is the majority of the world, with Tether is massive, while educating them on Bitcoin. I think the future is just insanely optimistic.
Couldn't agree with you more.
I agree with that.
Paolo,
as well.
It's really a pleasure meeting you.
Thank you, Professor Laffer.
Even though it's over the wire, so it's a really pleasure, and I'm a great fan.
Shall we give Lorenzo just the last question and then call it a day? Lorenzo, pressure's on.
Yeah, pressure's on. No, Paolo, I think it was great. Right now we have basically 99.9% of the market is dollar-based for stable coins, and it seems like nobody has really cracked, local stable coins. And, you mentioned, obviously, I think one big use case is store of value and people that want to escape inflation. But, locally, you could, in many countries, there are regulations as to, using USDT or USDC as a means of payment. Do you think there's a place for a Japanese, like a yen stablecoin and others? Because, going back to your point before, I do think and I use euros and dollars, I just think the stablecoins, they're intrinsically just better. They're more efficient. You have less middlemen, less fees. And so, where do you think, or what are the markets where you think, where local currency or local stablecoin could make sense?
First of all, just the existence of stablecoins will force all the intermediary companies to lower their fees, right? So even the Mastercards or like Visas. So ideally, if there is a 2% discrepancy, people will always use stablecoins. But eventually, there will be almost like a race to zero, a race to the bottom that will be forced onto all these intermediary companies. Now, we in the past tried with euro. We thought about every single other local currency. The reason for the stablecoin, as the stablecoins are made today, so don't think about what we could do in the future, but if you take stablecoins as they are designed today, the formula that we thought about and created, and there is for the success of stablecoin, is that this stablecoin on a certain currency is going to be successful as the success of that national currency outside its own borders. So for the US dollar, if you go outside the US, you stop 1,000 people in the streets, you ask them, would you prefer to hold your national currency or the US dollar? 999 will say, I want the US dollar, right? If you go outside, you go instead with a euro, and you go outside of Europe and in Africa, for example, and you ask people, 1,000 people, do you prefer the euro or your national currency? A lot of people will ask, what is the euro, right? So the success of the dollar is because everyone knows what the US dollar is. It's in every single mind. Everyone is born trusting the US dollar outside the United States. So that is the best product the United States ever created. So that's why it works. Now, people want to get out from the Argentinian peso. So sure, you can, by the way, most of the banking, most of transactions are already digital, right? So sure, you can add the stablecoin in Argentinian peso, could work, but still people will sell it to get the dollar version. So it's kind of like you are not adding so much utility, because the end result is that people will try always to go where they feel safer.
I think you're underestimating the future very much on that.
How so?
I think this stablecoin if you did it, would be preferred over the dollar if, in fact, monetary policy doesn't change dramatically in the U.S. I really do. I think the dollar choice here, I think if you asked 99 Americans, which would you rather have, a stable coin that's indexed to the dollar plus an appreciation for inflation, they would choose the stable coin.
To my defense, I said that, I was talking about the past. So, and I don't want to spoiler the future, but yes. And also I was talking about foreign stable coins, like an Argentinian peso stable coin. That's why it doesn't work.
I got you. I was very involved with Menem, and I was, and a lot of other economists, by the way, but in the currency board there with Menem. And, that's what we're talking about now with Malay as well, and how to stabilize the value of the peso. And but I think you're if you do this thing correctly, Paolo, you and Giancarlo, I think you could replace literally or be a major competitor to the US dollar.
Wow. So I have learned so much. Thank you, Dr. Laffer. Thank you, Paolo, for this amazing teach-in. This has been a teach-in for me.
Absolutely.
Right, Rod and Lorenzo?
Same here, Cathie. I just this will be a great wrap, and I cannot wait for round 2. So again, thank you, Dr. Laffer, Paolo, Lorenzo, Cathie.
Pleasure.
Thank you, Dr. Laffer. Thank you, everyone. Thank you, Cathie, for organizing it. Thank you.
Thank you.
ARK Invest is a registered investment advisor focused on investing in disruptive innovation. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. It does not constitute, either explicitly or implicitly, any provision of services or products by ARK. All statements made regarding companies or securities are strictly beliefs and points of view held by ARK or podcast guests and are not endorsements or recommendations by ARK to buy, sell, or hold any security. Clients of ARK Investment Management may maintain positions in the securities discussed in this podcast.